You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
All right, Brandon, welcome back. How's things going?
Yeah, things are going well. Living that YouTube life, you know, same as usual. How about
living
you?
that YouTube life.
Yeah, living that.
Just about, yeah.
I still don't like calling myself like a YouTuber. I don't consider myself a YouTuber.
I hate it.
I reckon the best YouTubers are people that do something else and do YouTube, like they convey that something else through YouTube. I reckon that's the thing. Like, I'd much rather call myself an investor and I run a YouTube channel kind of thing.
True. Yeah. I mean, yeah, when you think of YouTuber, it's not really... It doesn't really align with what we do. Like, I just think of someone doing some kind of entertainment or comedy.
Yeah, exactly
basically,
right. Some commentary, video games or something.
Yeah, it certainly doesn't. But yeah, what's been happening? What's been going on this week?
Not a lot. I'm trying to get ahead with my content. I just want to get a couple of weeks ahead, so I've got a bit of a cushion. And then, like, if anything just comes out, I can instantly just make a video about it straight away. Like, even with Tesla earnings, the video I made about that, I was still like 2 days late or something like that. So
yeah, no, I completely understand that. I at the start of the year, I always try and get like at least 1 or 2 weeks ahead.
Yeah,
usually ends up being about one.
Yeah,
with everything that sort of just comes up in life.
It takes so long to put a video together too. So.
It does. I mean, I guess there's kind of, this is a bit of an inside sort of thing, but there's kind of like a few different types of videos we make. Like, some of them are kind of, they don't really take that long. And by not that long, I mean maybe like 5 or 6 hours.
Yeah.
And then you have the other videos where you're planning them over multiple days. And those ones are really, you can really only do those if you're ahead.
Yeah.
Because otherwise you're feeling the pressure of needing to upload in the next couple of days. And you feel like, I can't spend the next 2 days putting this video together. I'm doing research and everything. So yeah, it's
that last video that I put up, that Tim Cook one, I spent a whole day just like writing it. And then, I spent a whole day writing and recording it. And then I spent the next day editing. And it's 10 minutes long.
Yeah, it's insane.
Yeah, it takes a lot of time. I don't think people quite understand or appreciate how long it takes. But
yeah.
What was your latest one? You're talking about Warren Buffett.
Yeah, so I did a video and I just titled it my favorite, what did I call it? The best investing advice I ever got or something like that.
Yep.
And it was really based around just a core investing principle that Buffett has spoken about many times.
Oh, right.
Which is just basically just focusing on how much cash a business can deliver to you.
Cash flow.
But that was a big video for me as well. I spent, probably a couple of days putting
it
that
makes sense. It's kind of just like the mentality of treating, when, like, as an investor, treating your investment as though you own the business. I feel like that's quite rare. Like, people don't really do that. Warren Buffett does it. Like, he's known for it. Like, you own the business, and then thus, because you're thinking as the total owner, you got to think about how much cash do you get out of that business. Whereas I don't know. I just don't understand why people don't think about it that way normally.
Yeah. I mean, basically what I said in this video was that one phrase basically lays the foundation for all of the decisions that you make. Like, everything has to come back to, will this impact how much cash I get out of this business? And it makes complete sense, because that's the entire purpose of investing.
Yep.
Is to get more back from what you outlaid.
Maybe it's because people just think about investing as trying to buy a stock and sell it when the stock price is higher. They don't really make that deeper connection of being, they're more like speculators, I suppose, as opposed to investors.
Yeah, I mean, it kind of makes sense as well, because if you see the stock price of a business bounce around over the course of a month or a couple of months, you could be easily led to believe that short-term events are what drive stock prices all the time, which is not the case. I mean, they drive stock prices in the short term in many cases, but over the long term, there's a clear pull based on how profitable the business is and what it's actually worth.
It's that classic phrase of the what is it? In the short term, the stock market's a voting machine.
Voting machine, yeah. And in the long term, it's a weighing machine.
Yeah, exactly right. No, that's it. Man, imagine if everyone just invested like Warren Buffett. That'd be nice. Or would it just not work because then there would only be select few very good businesses that would have all the investors' money and no one would invest in the garbage startups and all that sort of stuff.
Yeah, I mean, it would certainly mean, that's so true. If everyone invested like Warren Buffett, the IPOs would be an absolute flop.
IPOs wouldn't even be a thing.
Yeah.
You'd be begging, really please invest in my new company, please.
Yeah.
I think I watched an interview where Warren Buffett was like, I don't think I've ever invested in an IPO ever. And I mean, he's been investing for a long time. And then Charlie comes in and says the same thing. He's like, I really don't think we've ever done it. And then that completely shuts down the interviewer who's like, oh, crap, now I just got to ask my next question.
It's so funny listening to them because they always have so little to say for most questions that are being posed by these just basically idiot interviewers.
Yeah, it's because they ask them the dumbest questions. It's like they know their they know Warren Buffett and Charlie Munger's strategy. Ask them questions that actually give us useful information about their strategy. I mean, there's no point asking Warren Buffett about the latest Uber IPO because he'll just turn around and say, I'm not interested.
Yeah, pretty much. Anyway. Now, we better get to this sponsor for this week.
Oh, yes. Yeah, we do have to do that. Do you want to do it or do you want me to?
Nah, you go for it.
All right. Well, as per usual, this episode is sponsored by HyperCharts. So HyperCharts is a website, hypercharts.co. Just log on and have a look at it because most of the information over there is free. Basically, they just take a lot of the popular American companies and they will draw the numbers out of the financial reports, the quarterly reports, the annual reports, and they just put it into graphs. It makes it really easy to understand, like quarter over quarter growth, year over year growth, and that sort of stuff. One thing to mention as well is that they're just in the process of getting HyperCharts private financials going, where you can basically get the same kind of graphs and charts that you see on HyperCharts for publicly traded companies, but you can do it for your own companies, which is pretty cool. So I would definitely encourage you to at least go and check it out because, as I said, most of the stuff over there is free. They do have a premium mode, which just unlocks further in-depth charting, lots of other kind of cool little features. You can learn more about it at hypercharts.co/premium. And if you want to get a 1 month, so usually you can get a 2-week free trial. If you want to get a 1 month free trial of HyperCharts Premium, then make sure you use the referral link YIP for Young Investors Podcast. And you will get a month free premium. So thanks HyperCharts for sponsoring.
Thank you. And one thing I did want to mention, I just forgot about it, but I was thinking about it before the podcast, was you recently just started a Facebook group for your profitable company. And it's doing really well.
It's going really all right, isn't it, that Facebook group? I like Facebook groups. It's just nice. Everyone can kind of interact with each other. I'm just trying to find it now. I think it's got like... Is it 536 members at the moment?
Yeah.
Yeah. It's just nice. I think it's just nice to have a place, like everyone uses Facebook. So it's nice just to have a Facebook group where, like-minded people, because I feel like there's not too many. I know that you've got your platform's Facebook group, but I don't think there's any or many kind of well-regulated investing groups for Australians where you can just join up and ask questions to fellow investors and kind of just have a yarn about different stocks and whatnot. So
yeah, and I mean the YouTube comments are great, but they're just Facebook groups are way better for sharing with other people your ideas and sharing. You can't even post photos in the comment section of a YouTube video.
Yeah, exactly.
To be able to share like a bit of information or an article or something like that is really useful. But I was surprised. It's going really well. I've seen lots of useful stuff in there.
Yeah, and, it seems to be, people seem to be enjoying it. We're starting up a league in the ASX share market game, which is pretty cool. So if you want to join our league, then feel free to go over to the Profitful Investing Community. That's what we're called on Facebook, and join the group. And then you can get into our share market game as well, which is just paper trading. So are people just selecting? Do you have like a set portfolio or something? Yeah, we've got it's obviously no money involved. It's just a game, but you get given 50,000 fake dollars to go ham with on the ASX, and I think it lasts for about a month or two. And it's just a website or a game that just gets you more familiar with how share trading works and that sort of stuff. So
Oh, that's so cool. Yeah, I think we did that. I did one of those in high school.
Oh, did you? Yeah.
I wonder if it's probably the same website because I think it was $50,000 and it was Australian.
Yeah, it'd be the same one then, I would imagine.
That was a lot of fun. I think that was probably my first exposure to the stock market.
Right.
Doing one of those games.
Right.
Interesting.
It's pretty fun.
It is. It is fun.
Especially when you know you're not going to lose money. It makes you bet big.
That's exactly what I was going to say. It doesn't matter. You can go like, here's $40,000 on this stock.
I'm going to dump 50K on a penny stock.
Yeah, just go for it. Go for the big win.
Yeah, it's pretty funny. But if you wanted to learn more about that, or if you wanted to join the group, then feel free to come on over. It's completely free to join. It's called the Profitful Investing Community, and just send us a request to join, and I'll add you in. So, yeah.
Beautiful.
Awesome.
One thing I did see this week was Samsung unveiled a few different phones, a few flagship phones. They had their sort of Galaxy S lineup that came out, as well as another phone that came out. I only learn about phone stuff from MKBHD. He just makes the best. Do you watch his?
Yeah,
his
all
content?
the time.
Yeah, he makes the best content. If you don't know who that is, go look him up because he makes by far the best tech related content.
Crispy. That's how I describe it.
Yeah, I think he uploads in like 8K or something because YouTube, it's really sad. I don't know if you notice this too, but the video quality before you upload it is so much better than after it's being watched.
Yeah.
So if you want to get anything that looks really crisp, particularly if people are watching YouTube on a TV, you really have to upload in like 4K and have it compressed down.
Yeah.
Which is
that's true.
Not really. Yeah.
But I mean, otherwise, most of our life would be spent just buffering. So,
yeah, unless I'm going to go out and buy a Mac Pro or something.
Yeah, exactly. Or have the beefiest internet possible. Then you can understand why YouTube has to compress everything so much. But yeah, definitely MKBHD makes great videos. But yeah, you're right. These what were the 3 new phones? There was a flip phone in there, wasn't there?
Yeah, so there was really 4 phones actually. We can start with the flip. So the flip is called the Z Flip. Okay. And for those who have sort of been following the flip phone sort of space, I guess, you might have seen the Samsung one, which kind of opened like a book. So it kind of folded in the middle and then it went from basically like a normal phone size to becoming like a tablet kind of size, like a square. Whereas this one, it folds down. So you could imagine like an old Razr phone or an old flip phone, really.
Right. So but horizontal the whole thing is fold.
Screen. Yeah, a horizontal fold, which is really interesting. I mean, first when I saw it, I think I wouldn't buy anything like that because the screen is so long.
Yeah,
it just doesn't seem right to me. But maybe it's one of those things where we just haven't adjusted to the change yet, you know.
Maybe. The interesting thing I took out of the MKBHD video that I saw on the flip phone, which I can completely agree with, is how annoying it would be scrolling over that fold every single time. Because that's the thing he highlighted when he was just scrolling down. Every scroll, he would scroll over that crease. Yeah. And it was just so annoying. I mean, especially because like swipe controls and scrolling controls are so precise now with these smartphones that we've got. Even if it's like got slightly thrown off just a little bit by that crease, I reckon that'd get pretty annoying.
Oh, for sure. And he was hands-on with what I presume was a brand new one version of that phone. And you could already see the crease. Like there was...
Oh, yeah.
It's not as if it's a crease that just comes over time, like a bend in the screen, that is, that I'm talking about. It's just there. And that would bother me so much, as well as like the back has the mechanics of a hinge. So you can constantly feel the hinge when you're holding the phone. Just all of that just puts me off. As well as the fact that he mentioned that, I think he mentioned this in the Razr video, because Razr actually came out with their own flip phone. Basically, they reinvented the original Razr. Yeah, and the other thing that he just mentioned was that there's really no reason to have a folding down phone, because I can fit a phone that size in my pocket. Like I don't really have an issue with that. Whereas it kind of the sideways folding one kind of means that you have a tablet in your pocket. That's and that true. Kind of has a bit of utility. But yeah, that was just something that I
it means you can fit a tablet in your pocket. But yeah, you're right. I mean, the fact that a normal phone can already fit in your pocket makes a horizontal fold make little sense. So
Yeah.
Yeah, I don't know. Yeah.
They released a couple of other phones. So
Yeah.
they had the Galaxy S lineup that they released, and they called it the Galaxy S20, which is
Right.
kind of interesting.
I guess for 2020 maybe.
Yeah, exactly. And they were going up by one each year, but they've just decided they've jumped to the S20,
Yep.
get ahead of the competition in some way.
It was such a revolutionary jump in our technology that
Yeah.
we've gone straight to the S20.
Yeah,
That'll be the
I'm gonna have to
marketing.
buy it. Yeah, exactly. Yeah, iPhone 12. What?
Yeah.
S20. No, but they released 3 new phones in this lineup. So phone companies are just really pushing the spread of phones now.
I reckon.
But they've got the S20 as usual, the S20 Plus, which is just the bigger version, and then they have the S20 Ultra, which is supposed to be their Pro equivalent to the iPhone 11 Pro, which Apple came out with recently.
Yep.
Couple of interesting things about the Ultra. It supports 5G. Actually, I think all of those phones support 5G. The Ultra's screen is 6.9 inches.
Wow.
And just to give you a comparison, the iPad mini is only 7.9 inches. So it's almost
What
as
the hell?
big as the iPad mini, which is pretty insane. Obviously, it's longer, but
Yeah.
that's crazy. And the other
Whoa.
thing that I thought was just insane was that this is the starting price for the
okay.
lowest model. The base model is $1,400 US, which is about 2,100 Australian.
Far out. It's just ridiculous how expensive these flagship phones are these days. I mean, that's a computer.
Yeah.
That's-
I don't know if I was mentioning this on the podcast or off air last time, but I'm usually a person who buys a new phone every year just because I'm really into that kind of tech.
Yeah.
But last year was the first year where I looked at the prices and I just couldn't justify it.
Yeah.
Because it was like, $1,600 for a nice flagship, a
Yeah.
really good
I
flagship
remember you
phone. And now
mentioning
it's, if it's now $2,100, it's just ridiculous. There's no way I'm paying that every year. Maybe
That's
not even every second year. That's just insane.
That's a massive chunk of money. But that's the thing as well. I just don't understand. Maybe this is just because we're so switched on with money. I don't understand why people drop these amounts on new phones, considering that same phone, give it 12 months, is going to be half the price.
That's true. I think maybe, I don't know, I just thought of this just then. Maybe one of the things is that a lot of people are just on really heavy plans, and part of their plan is you get a new phone every year.
Right.
So they kind of don't feel the hit
Maybe,
of a
yeah.
$2,100 phone, but they're paying $150 a month for a phone bill. So it's kind of mitigated in a way
Man.
that they don't feel the hit. But I always buy phones outright.
Yeah, me too.
Somehow Vodafone has given me the greatest plan of all time that I've just had for so long, and they can't get me off it.
Oh, really?
It's really good. I think it's
Far
like
out.
$30 a month, and I get like 200 gigs of data.
200
Something insane.
There's
They keep-
something messed up with that.
Something's gone wrong, but they can't get me off it. So
Yeah, you can't take me off this plan. I've been on this plan. I've been on this plan for my whole life. You can't
basically
do
have.
this to me.
yeah, if they try and take something away, I'll be on customer support for
Yeah,
hours.
you'll be nagging
Don't you
them.
dare.
They're like,
I want my
the customer support team will be sitting in their room just being like, oh God, who's taking the call from Hamish today?
Yeah, they have like a list of like the worst plans, and I'm just at the top. Like,
Yeah.
How do we get this guy off this plan?
we have to get this guy off. The CEO gets together.
Yeah.
They get the management together and going, man, we would have posted such a good profit in this quarter, but there's that one guy in Melbourne that still has that crazy plan, and he's eating up all of our profits.
Yeah, like in the annual report where they talk about they discuss their profits. They're like, revenue came in at 2% under expected, mostly due to one individual user in Melbourne.
Oh dear, that'd be so funny. You just like tricked them into some sort of plan, and they just can't get out of it. It's
Yeah,
like
pretty much.
whatever that thing was with Robin Hood, where you could keep.
Yeah.
What could you do? You could keep getting.
keep taking margin.
You can
on
keep getting
margin, on
higher and
on
higher margin loans. That's right. For nothing.
Yeah.
Yeah.
And there was that guy who racked up like $100,000 or something.
Yeah.
Of margin debt, and he was like, I think he was like 18 or something or 20.
Jesus.
And I saw Graham Stephan spoke to him afterwards, interviewed him afterwards, and he basically said he hadn't even thought about the consequences of it on his
Wow.
credit score or anything like that, which is pretty insane. But yeah.
Good luck.
Good luck to you. In
Good
terms
luck.
of Samsung, the stock didn't really do too much after that event, but it is up 40% in the last 6 months. So
I guess it was probably all expected.
yeah, seems that way. Yeah.
Yeah. Should we move on to our next news story?
Yeah, what have we got?
Let's talk about George.
Let's talk about George.
Oh, George. What's his last name? Calambaris.
Calambaris. That sounds right.
Calambaris. Yeah. Anyway, the MasterChef judge dude that wasn't paying his workers very much. He just came out on social media and he brought the news of the collapse of his restaurant empire. So yeah, pretty much I'll try and find it. Although we have all continued to work tirelessly and overcome the many challenges we have recently experienced, with deep sadness and regret that today Made establishment has been placed into voluntary administration. How sad. Sad. Not really.
I'm sad for the business, and I'm sad for all of the people that make up, because you should think of a business as just a lot of people working together.
Yeah, it's a collection of people.
It really is just a collection of people working together.
Yeah, I think the definition of business is a group of people that come together to make a product or service.
Beautiful. That's it.
That's the definition of a business.
Yeah. And I mean, I'm sad in that respect. I mean, it's always just, I think maybe it's because, I mean, like we kind of have our own businesses going. I'm always sad when I see a business go down in any way. But of course, this isn't kind of something that was unavoidable. Yeah. This is a situation that was kind of caused by good old George, good old Mr. MasterChef.
Good one, George. No. So it says, I was just reading the article, and it said that he was asked by a Fair Work ombudsman in 2015 to investigate the pay breaches, and he didn't do it. And then later there was some report that came out which identified that he'd essentially stolen $2 million in wages. And then with further investigation, they revised that figure up to $8 million. Wow. Which is pretty crazy.
Yeah.
But yeah, I mean, I just don't understand, because it seems like the number one law that gets broken by companies is underpaying their workers. It seems like that's always the thing that companies get pulled up for, is just underpaying their workers.
We do hear about that a lot.
Yeah.
I mean, there has been a lot of instances of that. I don't know if it was Grilled or Schnitz, one of those in Australia. They had a huge thing underpaying their teenage staff members.
Is there just not enough regulation? Is there not enough funding for the regulators or something that can stay on top of all these different situations, so businesses just feel like they could potentially get away with it? Or do you reckon it is, in most instances, just oversights or people not understanding the rules properly? Or
yeah, I mean, there's always, I mean, each situation's probably different, but I can actually speak from experience.
Right.
I used to work at Woolworths, and I was underpaid for about 2.5 years. And what happened was they weren't purposefully underpaying me.
Right.
But basically, when you start working there, you're on, I don't know what it's called, a temporary wage, basically a probationary period where you're getting paid $1 less per hour or something like that.
Right.
And at the end of the 6 months or the end of the 3 months, they just didn't flick the switch to say I was off the probationary period. So from that point onward, I was getting paid $1 less per hour for about 2.5 years. So, and then I got the back pay.
Yeah.
But I guess in those situations,
how much did you get when you got back paid?
It was a lot.
Yeah.
It was more than $1,000.
Wow, that's pretty good. Especially for how old would you have been?
16.
Yeah, right. So that's pretty decent cash for a 16-year-old.
Yeah, it's kind of like a forced savings account. But I mean, in those situations, it's hard to tell whether they purposefully did it to a number of staff members so that they could have more cash on hand, or whether it's just an accident in their system that they seriously did not recognize for a couple of years, and then they amended it. But yeah, every situation's kind of different, I think. I think there's certainly a lot of situations where the person running the business is kind of being malicious. They need the cash. They're in trouble. And as a result, they know that that's an easy place to go because they can kind of just take a little bit from each employee, and it kind of adds up to a lot.
Yeah, George mustn't have been getting paid enough from MasterChef.
Yeah, MasterChef, pay your employees fair. All right? This is the call. I blame MasterChef.
What's he going to do? If he's not getting the millions from MasterChef, I mean, of course he's going to turn around and take it from his own employees. Oh, God. Yeah. There was definitely sarcasm in that, just for anyone that didn't realise that.
Brandon, how dare you?
Yeah, I know. But I tell you what, I mean, sometimes I feel like, I think that sarcasm is pretty easy to pick up on, but then I see some of the comments of, like, when I do use sarcasm, and then I'm like, oh my gosh, you actually didn't realize that was sarcastic. And then I go back and watch it, and I watch it as though people, you know, I try and take the approach of someone that viewed it as not sarcasm. And then I'm like, oh my God, I'm a monster.
Yeah. No, I think the sarcasm thing is a really Australian thing.
Maybe.
I feel like it's way more used in Australia, because I think every second word out of my mouth is sarcastic.
Yeah, it's super
Whereas
sarcastic.
I feel like that's not the case everywhere, but maybe I'm wrong. But yeah, I've seen those comments.
Yeah,
where it's like, oh no, they didn't get it.
Yeah. No, now I look like a really bad human being. I'm a terrible person. I'm going to stop uploading YouTube videos.
I'm done. I'm out.
Hey, one thing I wanted to bring up on this topic as well is I wanted to gauge your opinion on the whole restaurant industry as well, because I know that you've made, I think you've made investments in the restaurant industry in the past. I'd be interested to kind of hear your thoughts on kind of my position, because the way I always look at businesses in restaurant industries is that I find that restaurants are always going to be businesses that kind of struggle with competition, just because I feel like with restaurants there aren't too many competitive advantages going around. So, like, for instance, just observationally, I always notice that there's a fair turnover rate of different restaurants. Like, they're always closing down and new ones starting up. I feel like they're also not truly scalable by the fact that while yes, you can run a profitable, you know, restaurant, and you can take that formula and buy another restaurant or open another store. It's one of those business models where your costs, you kind of can't avoid the costs that are associated with the business, like paying your employees, you know, paying for rent, all the food costs and cleaning and that sort of stuff. Are those kind of things that you consider when you look into restaurants? Because I know you've got much more experience looking into kind of restaurant chains than I do. Do you think that there are competitive advantages in restaurant chains, or kind of what's your opinion on it?
Yeah, I mean, it's certainly a very, very competitive industry. And yeah, competitive advantages, for the most part, it's going to just come from really high quality service and building that brand loyalty around your restaurant.
Right. So it'd be brand moats. Yeah.
It is. And I mean, brand moats are typically what we would consider a narrow moat, meaning even if they have that advantage, there's nothing really holding customers to go back consistently to that restaurant. And there's always so many alternatives. Even just if you drive into a shopping center or a parking lot, there's probably 6 to 7 to 8 different types of restaurants. Even if you were planning on going to one, there's a good chance that you can dip to another. So very, very competitive. And I don't think many businesses can do like very well in the industry. I think some prove themselves to do that consistently over time. But in terms of like the investment side, it's certainly a more capital intensive business than something like a software company, where the capital is mostly just going into maybe servers and employees to manage it or something like that. But there are restaurants that do consistently produce high returns on capital. And the reason why is because each restaurant costs a different amount to establish, so that it's not as if every restaurant that gets put up costs the same. There's different locations, there's different building costs and that sort of thing. There's different size restaurants.
That's true.
And there's different restaurants that have, depending on how many people they can fit within their floor space. And then I guess more importantly, each restaurant produces a different amount of revenue. So you have so many different types of restaurants. You have fast food chains, you have full service dining, you have casual dining, and they all offer different types of food, and they all charge people different amounts of money. So some restaurants, they do a very good job at generating enough revenue per restaurant relative to the cost to build it, that it still generates a high return on capital. But yeah, I mean, it's certainly more capital intensive than many other types of businesses.
Right. Okay. And you wouldn't say that a restaurant business is one that's likely to have a really wide moat. It's always going to be fairly narrow, just by the fact that people are they could change their mind and go somewhere else and that sort of stuff.
Yeah, exactly. I would say, yeah, I mean, I would definitely agree with that. I think some businesses prove they develop a reputation. I mean, the clear standout is something like McDonald's. They have a clear reputation. You know what you're getting when you go there.
That's true.
You know relatively how much it's going to cost, and you know that you can pretty much get it within a 2-kilometer radius of wherever you are.
That's true.
So they've done a fantastic job of building a brand around that. And there's other brands like the restaurant business that I have a small position in is Texas Roadhouse. And if you look all over social media, there is not a negative thing to say.
Right.
Well, there isn't. That's not true. But for
you
the
know,
most part, if you go on
positive.
Yeah, if you go on Instagram, for example, you search Texas Roadhouse and see people posting photos, there is a lot of positive comments about just how impressed people were by it and people recommending it to other people. And I think that develops a strong brand around it. And then management comes into it. How good is management at just running that kind of business? And there's many other factors, of course.
Yeah. No, cool. And anecdotally, I've told this story before, but I went to the shops and I ran into one of my mates who's from the States. He wanted to pick my brains on kind of getting up to speed with investing and that sort of stuff. And I was talking about how, you got to find businesses you understand or you care about. And I just picked off the top of my head Texas Roadhouse because it's so American. And we were talking about it for a little while. And then anyway, when we were about to part ways, it was like, oh man, I really want to go to a Texas Roadhouse right now. So they must be doing a good thing over there. It seems like they've kind of got something different, got something kind of real that customers love going back to. So maybe that's a great example of one that has kind of formed a moat, a brand moat, a competitive advantage in their kind of dining experience.
Yeah. And I mean, ultimately investing is really just coming up with a story about a business. And as long as it's backed by good numbers behind your story, then you just kind of just have to see how it plays out. And that is certainly one that I think will play out favorably in the future, but we will see. Maybe we'll come back. We're still doing the podcast in 10 years, 5 years.
We'll see. We say that a lot. I guess we'll have to find out.
We'll find out.
It's so true. Hey, this is one news topic I wanted to bring up just quickly. Just because we've been talking off air about buying Teslas, is that I saw a tweet last night of someone from Australia reaching out to Elon and saying how the $40,000 Model 3 variant actually costs $100,000 here. And Elon replied, and he said simply, this does seem high. So, my gosh, fingers crossed that Elon over in the States right now is talking to his sales team or whatever and saying, yeah, the Australian Model 3 pricing seems a bit high. Fingers crossed. Imagine how good it would be. Do you reckon you'd buy one if we got some sort of price reduction? Because you never know how long those price reductions are going to stay if they stay. Like, I think the Model 3's gotten more expensive since it first came out in Australia.
Yeah, I'd certainly welcome a price reduction. It would sway me towards buying one. But
it would.
Surely, are they building Model 3s in China?
Yeah.
Surely that would reduce the cost. Surely that's closer. I honestly don't know.
Yeah, I was thinking that they could make Australian Model 3s in China. I don't know what their capacity is like in that China Gigafactory, though. It might only be enough to service China. But it's supposed to service the Asia region, and we are considered in the Asia Pacific region, obviously. But that's what I was thinking, because China, I'm pretty sure they drive on the right-hand side of the road, so it's left-hand drive vehicles. Yep. But at the same time, if they're servicing the whole Asian area, then I think Japan drives on the left. So they have right-hand drive vehicles. So they could potentially, if that factory ends up making both left-hand drive and right-hand drive, then I think that we could have, Model 3s built in China shipped to Australia. I don't think that we'd have to have the Fremont-made Model 3s, but anyway, I'm just crossing my fingers for a price reduction. Anyway, I just thought I'd let you know, because we've actually been talking off air about Tesla and how we want to buy one.
Yeah.
But apart from that, interestingly, you know how we were saying, I wonder what will happen to Tesla next week? Basically nothing has happened so far. It's really got nowhere.
Yeah, nothing happened and we're still talking about it.
Yeah, I know. Anyway, that's it for Tesla. We promise we'll move on. Actually, one bit of feedback I got for the podcast the other week was, where's the fishing chat gone?
Oh, true. I haven't been fishing.
Yeah, you need to go fishing again.
I'm actually, you know what? I'm going to organize that so that I have something to bring next week.
Organize your fishing trip.
I feel like that was the only week that I had something to talk about in the beginning. I'm always like, I got nothing on. But then that week I was like, yes, I caught a fish.
Yeah, guys, big news today. I caught a fishy.
I caught a fish.
Anyway, have we got anything else to talk about for this week? About Woolies?
Yeah, we could. Let's talk about Woolies. So what happened at Woolies? They're ramping up its war on waste.
They are. I think that what was it? This is over in New Zealand.
Right.
Woolworths New Zealand, which is called Countdown. They've removed plastic packaging and single-use bags in the fruit and vegetable sections. And instead they are offering paper and biodegradable alternatives, which I think is great. I think that's awesome. There's so much. That's the one thing that bugs me when you walk into a Woolies or a Coles, how much fruit, just like fresh fruit or fresh vegetables, how much is just wrapped in plastic? It doesn't need to be wrapped in plastic. I mean, there's like zucchinis that are just there, just stacked up on top of one another. And then there's like 3 zucchinis that are wrapped in plastic.
Yeah, it's kind of insane, isn't it?
What? What are we doing?
Yeah, because I actually worked in the fresh fruit department when I was working there, and I would always cop it from both sides. I would have someone come up to me with a bag of carrots and be just like abuse me basically about why it's in plastic.
Yeah.
And then you'd have other people who are, that they actually actively tell you that they like the plastic because it's just convenient. So I was just copping it from both sides, which was real fun.
That's unfortunate.
Yeah.
But yeah, they say here that the 10-week trial will ensure 65 products will be unwrapped and comes after widespread frustration at the use of plastic packaging, as well as collectible campaigns such as Ooshies.
Ooshies.
I don't know what that is. But yeah, good on, like far out. I love New Zealand. God damn. Sometimes I wish I was from New Zealand, I tell you, because they're just so progressive. I love their stuff. Like in Australia, Woolworths tried taking away plastic bags and they just got hate. Like people just, bring back the plastic bags. God damn it.
Yeah.
I just love New Zealand. They just love doing this sort of stuff. Like all about the environment. I love it. Good on you, New Zealand. Good on
job,
you.
New
If
Zealand.
you're from
Pat
New
yourself on the
Zealand,
back.
I salute you. Tell you what, I'm just going to up and leave Australia and move to New Zealand. That's how much I love New Zealand.
Go for it.
All right, see ya.
We can still do the podcast.
It doesn't change anything.
No, but I actually, speaking of this topic, there's a new shopping center that just got put up near where I live.
Right.
And I don't know, they're kind of going for a sustainable kind of shopping center. They have plants everywhere and really low, like most of the light is just through sky lights and
cool.
they're trying to be self-sustainable. But they have a Woolworths in there that I noticed did have the paper bags and the biodegradable alternatives. But they still had the plastic bags, but they were sort of charging 10 cents for a paper bag.
Right. Okay.
So I feel like that's kind of like the halfway point before they get rid of plastic bags if the trials are successful. And they also had all of the shopping carts were made out of recycled milk bottles, which was kind of cool.
That's cool.
So yeah, there was that Woolworths was it was really impressive. I was really impressed with that entire shopping center actually. It was really nice. Yeah.
I do like how it's starting to catch on. This whole sustainability thing is starting to catch on more and more in business. I mean, it never used to be, but now basically all companies will do a sustainability report as well, which is good.
Yeah, I feel like it's a little bit on the back of government to impose some regulations, but it's also just a matter of supply and demand. And I think that as people get more educated, there's just going to be people are more interested in places like that remove plastic and is showing some bit of initiative.
Yeah.
So I think we'll see a natural sort of progression towards more renewable and biodegradable alternatives. Thanks, Woolies, for your trial in New Zealand.
Yep. Now bring it to Australia. Come on. I feel like we can do so well in Australia. We just got to have the courage to up and do something. I don't know. Anyway, should we do some Q&A questions before we round out the podcast?
Yeah, so I saw one that was interesting here. Thoughts on the new stake pricing structure.
Oh, yeah.
I wasn't actually aware that they changed their pricing structure.
Yeah.
So they introduced a $9 a month for you doing limit
right.
and stop orders, and they had a $20 a month, which gives you priority customer service and a bunch of other things. This is not sponsored. This is just me reading off their website.
Yeah, I put this one in as well because I've been getting a lot of people commenting and asking me about what I think about their new pricing structure. I actually made a video on it very recently. It's like called something like something to do with brokerage sites. That's what the thumbnail says. Something to, like, watch this before you open your brokerage account or something like that. But I think it's fine. Like, fair enough. Stake, they were very open and honest in talking about their business model going forward. And they're kind of like a startup. And I was talking to Brian and he was just saying that, we just needed to now figure out a way that we can still offer, really good value for our users. And we can still offer that access, that cheap access to the US markets, which has always been a problem, how expensive it's been just to get stocks, from Australia in the US markets. But at the same time, he was saying, we've got to balance that with actually, making some money and making sure that this is a viable business going forward. So they're tweaking it. The thing that was good is that when I was talking to Brian, he was saying, look, we haven't locked in anything yet, and we're in constant discussions, within the stake team of like, what do we put in the 3 different brokerage packs? So I think there's like a basic one, which is completely free. So there's still like a free US brokerage offer there, but there's also then you get added functionality if you want to. I think it's like $9 a month for the next level up, and then there's one more level up. I can't remember how much that costs. $19 a month, but that $19 a month, that's way more like focused for day traders. If you wanted to trade on unsettled funds and that sort of stuff, you can take that. But I mean, for most people, I think the latest tweak, and this is subject to change, so don't quote me on it if it changes, but I think the latest tweak, you still get fractional shares, and you still now get free unlimited free trades on just the most basic free package. So I think that there's going to be a few tweaks here and there, because obviously they've got to figure out something that works well for their business. But at the same time, I think that they're doing a pretty good job. I mean, you can definitely tell just from my experience talking to all those guys, they're definitely trying to do what's best for their customers. That's the one thing that I take away from it. So, but yeah, that's kind of what I think about the stake pricing structure. Here, I'll ask this next one to you because I see that you've thought about it a bit. Can you explain the conventional wisdom of holding money during market downturns versus selling and then reinvesting? When is the right time to sell? Thanks for all you do.
Yeah, I thought this was an interesting question, so I thought I would discuss it.
Go for it.
And I think my interpretation of this question is, and this might be wrong, but my interpretation is, why should you be in cash waiting for a downturn when you could just sell when the downturn begins and then buy back in when it's much lower?
Yeah.
And my answer to that is kind of like trying to time the market has never sort of been something that you can do consistently. And the reason why is I can just give you an example of just over the past couple of years, the market has made quite a few 5 to 10% dips. Probably a fair few fives, I would say, maybe a handful of fives, and then maybe 1 or 2 10% dips over the past couple of years. And if you were trying to follow that strategy, 10% might very well have been enough for you to say, okay, the market's going to go down another 20 or 30, so I should get out at 10 and get back in when it drops another 20, 30 or 40%. And many people believed that. It's hard to believe when it's not happening, but what was it? Towards the beginning of 2019 or the end of 2018?
End of 2018, yep.
Yeah, I think the market went down maybe 15 to 20% in that range. Yep. And there was chaos. Like, people were really fearing that this was the end. I, for one, was sitting there sort of rubbing my hands together and going, oh boy, here we go.
I was with you.
Yeah, and I mean, many people would have sold after that 10, 15% drop and just thought, okay, now I can buy back in. But that ended up being the bottom. And then the stock market went up, whatever it did that year, 30%. So I think that the only rational approach, if you're trying to, unless you're sort of buying the whole market and dollar cost averaging, I think the only rational approach is just to buy businesses when they offer a good return.
Yep,
and
exactly
when they
right.
don't, just let your cash from your income pile up.
Pile up, yep. I mean, you don't want to be caught buying stocks. Like, even if it's a great business, you don't want to be caught buying it when it's really expensive. I mean, the fundamental rule of stock market investing is buy low, sell high. Even if it's a great business, you don't want to buy high, because a great business can still turn into a really bad investment if you buy it at a price that's too high.
Yeah.
So
exactly right.
I think that's right. I think you gotta just you just gotta follow the strategy. You don't need to try and time the market. You've just got to follow the strategy of buying great businesses when they're at good prices, when they offer good returns based on what price you can get them at. So, if the market is really, really, really high, then you're probably not going to be finding too many of those opportunities. You're probably not going to be able to sink a lot of money into the market. And you'll naturally just gather up more cash, whereas there might be times when the market does fall off a little bit, and maybe that just helps you find some of those businesses on your watch list come at some sort of good kind of margin of safety price, and then you can put some of that money into the market, and you can feel good that your downside risk is protected with the margin of safety and that sort of stuff. So
yeah,
I don't think it's a case of timing the market. I just think it's a case of finding a strategy and sticking to it, and then you'll naturally find that when the market's really high, you won't be buying much, and then when the market's low, you'll be buying more. I think that's just the way you got to go about it.
Yeah, and I think one thing people sort of get caught up with is they think that because the market broadly is overvalued, that there are no businesses on sale. And that's just not true. There are almost always at least one industry or one market niche
find them.
that is on sale, that's going through some kind of problem. And I've used this example a few times. In 2019, the industrial sector in the US, that being manufacturing and that sort of thing, went through a recession. So that sector actually was in a recession if you just look at it in isolation, which means that not every business in that industry went down, but there are quite a few businesses, more than average, went down in that sector. So when the markets are, I was just going to say, even when the markets are high, I'm buying every now and then, but certainly I'm buying less than cash is coming in. So the cash is kind of piling up.
And I think the main problem is that a lot of the people, or us and a lot of people that listen to us or follow us on YouTube, I mean, we're very interested in companies to do with like technology and that sort of stuff out of the US, like those companies that we interact with every week or every month or whatever, just in our natural day-to-day lives. And it is unfortunately those companies, those massive kind of tech giants and whatever, that are the ones that are really expensive at the moment. But exactly what you're saying, like if your interests or your circle of competence was not around, say, technology or something like that, and it was in what did you say, the industrials or something like that?
Yeah, industrial
or
sector.
Manufacturing. Then you probably would have been licking your lips saying, "Oh, look at these businesses that are now coming onto sale." And for you, I mean, it wouldn't have mattered that the market was so high based on these massive US technology giants being overvalued. You would have been having a great time with your undervalued industrials. So,
yeah, exactly right. All right, I'll pose the next question to you.
Oh gosh, all right.
Time for maybe one or two more.
Yeah, we'll do one or two. Yeah.
Okay, this is an interesting one. What amount would you recommend as an initial investment?
Oh gosh. Okay. Well, if you're in Australia, first things first, it has to be over $500 because that's an ASX rule. Only the first time you buy into a stock, you have to put in more than $500. So that's kind of your minimum. Geez, I don't know. I mean, it's so individual, right? Like, I would say that first of all, you have to think about your cash flow situation. So obviously you have to, like, fortnight to fortnight, you have to have a positive cash flow situation. And so, work out your income versus your expenses and only take what is coming off the top of that. In fact, I wouldn't even take all of that. I wouldn't even take all of what's coming off the top. I would take a portion of that and start putting it towards investments. I probably wouldn't sink that money in straight away. I'd probably let it, if I was, say, a passive investor, I'd probably let it grow up to like couple of $1,000. And then I would sink it in, because you've also got to think about your brokerage cost, because in Australia we get a little bit screwed over with brokerage costs being so high. So for instance, some brokerage sites, I know this is not all of them, like some of them are only $10, but some of them are like $30. So if you have like $1,000 to invest, and then your brokerage cost on the way in is $30, and then your brokerage cost on the way out is another $30, then already that investment has to perform really well just for you to break even. So, I mean, as I was saying, there's no right or wrong answer of how much your first investment should be. It has to be over $500 because of that rule. But I think the important thing is to make sure you've got your personal financial situation figured out, figure out your cash flow, what you can start to tuck away off the top. Let that build up. For me personally, I'd only be looking to maybe sink thousands of dollars in at once, just to make sure that brokerage doesn't really bother me too much. But that's for me. I don't know. What are your thoughts?
Yeah, I mean, it's obviously different for every person, but I mean, it kind of depends on your strategy. If you're looking at index funds and you're kind of dollar cost averaging into those, which is kind of what I think it is what I do with my index fund.
It's what I do as a beginner as well.
Yeah, I think that's applicable to most people, whether that's your whole portfolio or a portion. But I would just be thinking about, like you said, your cash flow and how much can you consistently contribute is kind of going to play into it. Because if you're dollar cost averaging, you would want to consistently add the same amount. Even if it's your initial investment, you'd want to add an even amount over the course of a year and then the next year, meaning that you don't want to just dump 5,000 in there and then have no more cash flow to add for the rest of the year. You might want to break that up into 2 or 3 or 4 different trades spaced evenly throughout the year. That's what I would personally do. But yeah, I mean, it's, and brokerage cost comes into that, of course. If you're investing with kind of $500, $1,000 at a time, you really have to think about the percentage impact on the way in and on the way out. But yeah, difficult question to kind of answer for everyone.
It's just difficult because there's no one size fits all kind of answer. Exactly. But I hope that kind of gives you a couple of pointers to take away and think about. Should we finish up there?
Yeah, let's finish it up. Thanks everyone for listening. We did almost an hour, so I feel like there wasn't a ton of exciting market specific news going on, but we covered a few interesting topics today, and we're praying for Tesla to have something dramatic happen next week so that we have 20 minutes of the podcast to dedicate to Tesla.
Oh gosh. No, I kind of like not even, I mean, even today we mentioned Tesla. I want a podcast where we just don't even mention it.
Yeah,
I feel like that's unlikely because Elon Musk will do something crazy.
Yeah, we'll try for it next week. Can't make any promises.
Can't make any promises at all.
So thanks everyone for listening. And as always, if you have any sort of questions you want to, this is kind of new for this week actually.
Yes.
We created an own YouTube channel, its own YouTube channel, I should say, for the Young Investors Podcast. So if you were wondering why you stopped getting the Young Investors Podcast episodes in your YouTube subscription box, then you need to head over and just search in YouTube for the Young Investors Podcast. Find the channel and subscribe to it, and all of the future videos will be up there. And as always, it's going to be out on Spotify and iTunes as usual. But in relation to YouTube specifically, if you have any questions, then feel free to go ahead. Questions or topics or news stories or anything like that, just leave it as a comment on the YouTube version of the podcast.
Yep. Definitely go over, have a look at that YouTube channel. It's just called the Young Investors Podcast. Go over and subscribe, and make sure you leave any questions on in the comment section of those videos. So there's only one video up because I just started with last week's episode now that we've shifted it across, but all future videos from us will go up on that YouTube channel. So yeah, definitely go check it out.
Cool. All right. And thanks everyone for listening.
Thanks guys.
We'll be back next week.
All right. See you later, guys. See ya.